In the early days of advertising, we used to charge people based on how many times they would click on a website or visit. But then people realized you can make money off that. And then you had farms all over the world basically just fake clicking, basically creating click fraud, right? And we're kind of at that phase of Web3. So how do we solve that? Well, we don't think you solve it in the classical AI way, although there are tools around that, or sort of better sort of, tracking only. But we think by building a digital reputation system, we can really find a way in which we make that scalable for the long term.
Here we are with Yat Siu, the chairman and co-founder of Animoca, a crypto Web3 powerhouse. Yat, it's so great to have you back on the Defiant podcast. Welcome.
Thank you for having me. I think it's been a while, so really glad to be back on the show.
I want to get straight to the news with Animoca. I mean, Animoca, like I said, is a powerhouse. You've invested in over 500 companies. You're building
Actually, it's 600.
600. Okay.
Yes.
So definitely, an integral part of crypto and blockchain. And so, of course, you are now also thinking of being a big part of one of this year's biggest trends, stablecoins. I was really interested to learn that you're planning to issue a stablecoin that's regulated by Hong Kong authorities, I understand. Would love to just hear more about those plans.
Yeah, so very quickly, we have a joint venture with Standard Chartered and Hong Kong Telecom called Anchor Point. This is actually applied for the HKMA license, the Hong Kong Monetary Authority, which is basically like our central bank. I think, one of the things that's interesting here, of course, is that a stablecoin from, the key financial center for this region, and in particular for the Greater China region, is very strategic. We were actually participants in the sandbox before, as in the sandbox of the regulatory authorities to sort of figure out how that would work for quite some time. So there was only 3 parties, and we were one of the 3 parties. And of course, the big hope is that Hong Kong as a key financial center and also as a gateway really to East and West would make sense to have a form of, I guess, a financial asset in the form of an RWA, in this case, a stablecoin, that really can sort of translate itself to more commerce and trade and financial activities. Finally, I would add that Hong Kong is, of course, when you think about the Hong Kong dollar, right, is actually the OG stablecoin, because maybe many people don't know that Hong Kong dollar is actually pegged to the US dollar. And it's interesting because it's actually not pegged to the renminbi, it's pegged to the US dollar. And that's how Hong Kong has sort of maintained its lead as a key financial center.
Will this stablecoin will be Hong Kong dollar based then?
So at the start, it's all Hong Kong dollar based. Now, what's interesting about the HKMA license, it technically is a license that could apply for all currencies, but at the moment, Hong Kong dollars is really the one that is contemplated. And there's many use cases for it, really, when you think about local commerce, when you think about Hong Kong as a place of sort of commerce broadly, international, right? It's, and of course, the fact that it's actually US dollar sort of based at a roughly fixed pegged rate.
Also, I'm curious to learn more about how you are dealing with all the regulatory aspects of potentially launching this, because while it seems like Hong Kong is open to this idea, I know that China has been kind of backtracking or becoming a bit more restrictive in crypto regulation and legislation, especially recently with RWAs and tokenization. They've kind of cracked down on that a bit. So how do you deal with Chinese authorities on your plans?
So first of all, I mean, for us, it's not been an issue. But let me sort of maybe I like it how often Western trad media loves to sort of dramatize events. When China says they don't have, sort of say something, right? Then it becomes a crackdown, right? But it's kind of funny how if maybe a US sort of US media or rumors start coming around, it's it's much lighter somehow, right? So the assumption being that just because there's some rumor around the fact that China has some questions or issues around sort of Chinese companies sort of looking at RWA and so forth, that it suddenly becomes a crackdown, because it's not a legal thing. It's not been discussed openly, right? So I would say it's far from that. However, I think one can take a lens as to what's important for China. And the key messaging really, at least based on the rumors, is it's not based on companies based in Hong Kong or doing business around the world, right? It's actually specifically based on tokenizing assets in China. So in other words, the messaging was more around well, if you have real estate in Shanghai, don't expect to tokenize that for the time being and then sell it to the world. At least that's not what this is meant for the time being. But are people excited about RWAs across the region? Absolutely, right? But what does that mean specifically for China? That question is still uncertain, right? And I think a lot of people like to speculate and a lot of people like to fantasize about things like, oh, by allowing stablecoins in Hong Kong, does that mean that we're going to have, free trade of crypto in China? And I think the answer is a definitive no, because you can't even trade regular currencies in China, right? Openly. So what makes you think that you could do this with Bitcoin or Ethereum? However, you can imagine that the role is, as it is today, between Hong Kong and China as a bridge, right? So Hong Kong is the finance bridge for China in traditional finance. So it would make sense that Hong Kong plays the crypto bridge, if you will, or the digital assets bridge for the region. But of course, we don't know that, right? And I think that's really the sort of, let's say, the messaging here. Now, of course, that means that if you're a Hong Kong-based organization or you're a joint venture like ourselves, it is, we're not doing business in China. We don't have assets in China. We don't do development in China. So this doesn't affect us because really it's about a global business. And I think it's not so much about people who are applying for the license for the purposes of, let's say, Hong Kong-based or international-based commerce. It's really about making assumptions or perhaps a little bit of innuendo about how it could affect their assets in China, which of course is not clear. And to be clear, also, all the licensing frameworks that are discussed do not discuss this whatsoever. And if you look at the stock market, there's been a lot of hype about this when people, whether this, like a few months ago, it was like companies buying Bitcoin. So stock price rips, right? And then you have companies saying, we're doing RWAs, we're doing a stable coin, and their share price rips, right? This is kind of when regulators start sort of raising their eyebrow, understandably so, and saying, okay, that's not exactly why we wanted to do this stuff, right? And so it's probably safe to assume that it's a reaction towards sort of cooling down the speculation. Most recently, the HKMA put out a statement, for instance, and said, look, it's unlikely that most people who apply will receive the license, right? Because there's a lot of them have put out expression of interest and even announced that they want to do a license, but the chances of them getting it isn't necessarily high. And the HKMA has gone out and made that clear. And again, I think it's just a response to that, trying to make sure that the market doesn't remain over speculative, or more importantly, that perhaps some people might be taken advantage of by essentially making claims that are unlikely to succeed.
In your case, though, how far along in the process are you? Like, what chance do you assign of actually getting your stablecoin approved?
Well, I mean, we don't know is the right answer because we don't. However, we think based on our own merits that we should have a good case because we are a joint venture with Standard Chartered, which is a note issuing bank. So we've got the bank safety, security, and custody. We also, as Animoca, are a leading, basically, digital assets Web3 brand. And the other partner is Hong Kong Telecom, which is the incumbent telco. I feel like, we should have a fairly good chance. But of course, it's fingers crossed. We do not know. And we hope for the best.
Are there any timelines on when you expect to see an approval, or?
No, there's no definitive timelines given. However, the legislation passed just at the start of summer in this year. And so I do believe that there's a desire to try to get something going soon. But of course, we don't have full clarity as to when that is. It's not up to us, right?
And then shifting to kind of the use case that the stablecoin might have. You talked about how it can be used for commerce in Asia and Hong Kong. And at the same time, I saw that you have this new kind of merchant network kind of loyalty program, Airshop. If you could talk about that. And it to me, it seems like this would be a great place to fit your stablecoin within your ecosystem, but would love
No,
to hear
absolutely.
from you kind of what the plan is.
So, I mean, I think first, why are we excited about stablecoins broadly? It's not just because there's a way of doing commerce. To us, this isn't just about sort of, a Web 2.5 thing, although it could be interpreted that way. Because, of course, let's say in Hong Kong, most people are still using the Hong Kong dollar and they're not using a stablecoin. It's certainly in the US dollar form. And even if they are using US dollars, they're not converting it to Tether or to Circle because one, they don't have a use case for it, perhaps, or two, they're not familiar with it. Maybe they don't trust it. Right. So having a stable coin from a trusted partner that is licensed and regulated in the region that they're familiar with is obviously one way of onboarding. So it's a bit of an onboarding strategy. But what we're most excited about in terms of use cases, and we can get to Air SDK shortly, What we're sort of most excited about is the composability that happens when you have essentially stablecoins or these type of sort of assets on chain. Because when you have that, then we expect new innovations to be built on top of it. So, for instance, today in Hong Kong, we have really a dominant payment system. It's called Octopus. And it's kind of like a sort of, cash card payment system. It's very, very sophisticated. It was really leading edge for their time, right? But of course, if you wanted to tap into the system that is Octopus, you need permission, you need APIs, you need special access, right? Now, if this was done in the form of a stablecoin, actually third parties can create products immediately and do that essentially with Hong Kong dollars the same way, right? And so this could have all sorts of utilities and applications, not just in the digital space, but also really in sort of the real world, right? Some people have been talking about where they could be used as a form of payment for taxis and could be instantly converted at that moment in time, for instance, or could be used for sort of, tourism. And developers can build new applications on top of basically access to the stablecoin, as we have seen in DeFi. So that's what we're particularly excited about. So if we build the infrastructure and provide it, then we think new developments could happen. Now, in the case of Ares DK, it's not limited to a stablecoin that we would be supportive of. It's basically, you could use Mocha token or anything. And really, it's a gateway for traditional companies or any company to tap into basically the Mocha infrastructure in the form of this SDK, making it easier for them to basically take advantage of our identity stack and taking advantage essentially of, basically a way to sort of accrue value, loyalty point systems, all that kind of stuff, right? And it makes sense because loyalty points is basically like accruing a score of whatever activity that you do that gets recorded on chain. And there's a value that you can then basically attribute based on that and a score that you can then use. No different than your Asia miles or your, frequent flyer miles or whatever it is that you have, except now you can also receive value for it because it can be tokenized.
Is this already being is this program live, or if not, can you give examples of how you imagine the system to work?
Yeah, I mean, for instance, one of the sort of large rollouts is with SK Planet. SK Planet is part of SK Telecom. It is, the largest loyalty system in Korea with about 20 million users, right? And so they've, how would they integrate it into their platform? They use basically an SDK. And basically, that's the way in which they would be able to sort of integrate that and then, tap into basically the Mocha ecosystem. Of course, it means that the user itself can also then obtain benefits from the form of airdrops and other things as well. So they could be earning tokens from the ecosystem to do activity. So it's not, it's basically helping them onboard in a seamless way into the sort of Web3 world.
Speaking of that, I wanted to also shift gears and talk about Mocha Chain, which is the blockchain that you're building. Can you give more background on that, and also when the testnet is expected to be live?
Yeah, so there's really, the vision for so the Mocha chain is to essentially have an identity-based chain. And so really, it's something that works with every chain. It's interoperable. It shouldn't be looked at in the same vein of trying to be like an Ethereum or a Solana in that vein, but rather it's something that you can essentially sort of bolt on. Because when there's a way to build and compose, we think chain infrastructure is actually the best way to do so. Now, why is digital identity important? We think it's a problem that hasn't been solved properly. Because when you, for instance, think about identity and we think of it in terms of reputation. What's your most important asset? It's your reputation. How do we sort of create value in a reputation? There's a soft form, which is, oh, are you famous? Are you well known? What do people say about you? But then there's also the more hard form, which is, what's your credit score? What were your test grades? Basically, where do you live or stuff like that, right? All of these actually form part of your identity. Now, imagine if you can take your identity that you have in one country to another country. Well, that's kind of the problem we have a little bit on chain, right? Which is that I don't have a way to say, well, the attributes that you have, on one ecosystem is not really portable in another because it's locked to a particular ecosystem. And when you look at it, for instance, from the Web2 perspective, as in like Facebook and Google and those guys, actually, they own your identity stack and they own your reputation layer and you have nothing, right? So this is basically a way to hand that over to the users. And you basically end up having a way in which you can build basically an on-chain credit score as part of that. And of course, we start by giving it in the form of these airdrops, because if you have a good reputation, then you can get better airdrops. as an example. But then from there on, you build a better reputation, and you can see how that flywheel goes. We think that is the core of building trust in a society, to have a reputation-based system, because it's the one thing that you are sort of willing to defend, and it's not just about money, because I think we're kind of at a point where often it's just about money. And of course, reputation is a longer term value hold. And that's how we build better ecosystems. Like if we had sort of a society without trust and reputation, it wouldn't function, right? And so I think in crypto land, we have a little bit of that problem where, it's permissionless trust, but we've kind of taken that concept of permissionless as to say it has to be entirely anonymous. You can be anonymous, but you don't have to scrub away your identity and your reputation, right? In terms of, who you stand for or what you are, right? So that's kind of one part of that. And of course, the way that we also sort of rolled it out is we let our users participate in the investment portfolio of Animoca Brands. Animoca Brands makes many investments. We have, as I said, over 600 portfolios, for something 80% of them have yet to launch a token. And if you are a Mocha token holder, you can basically stake your tokens, and over time, through this thing called staking power, have the ability to participate in sort of our portfolio by earning them, by using them, and creating activity. And of course, the portfolio receives the benefit of acquiring these users. And so it's kind of a way of almost getting an index of essentially our investment portfolio. Now, this is, of course, that's the start of the flywheel. And, why we're doing this is not just because we want to add value to Mocha, but over time, the user builds a reputation. And we've seen this already happen, where people say, oh, if you happen to own these Mocha tokens, actually, I'm going to vampire attack you. And I'm going to say, if you're a Mocha token holder and you have this kind of ID, I might not know your name, but I know your score. I'm going to go give you other tokens in the ecosystem. And we like that because actually, in a way, it enhances the value of continuing to accrue your reputation, right? And we think that's how it should work, right? And so we're already seeing people airdrop tokens to our community, without actually being invested by us because they think they're valuable, stuff like that, right? So you can see how that flywheel develops. And of course, the key thing is the reputation score and the identity stack, because that becomes your investment. Because over time, you want to have a higher reputation, so you receive more, just like you have in real life. I mean, in real life, we go to college, we make work, we don't steal most of the time anyway, for most people, right? We don't do silly things, right? That basically hurt our reputation. And as a result, we build a better trusting society. And that's really what we're hoping to do. And with Mocha Chain, you can use our infrastructure and roll out your own, and then share the attributes and the score between the different ecosystems, which I think is very important.
It's a really interesting vision. But just looking to understand a bit more exactly, how this works. So just quickly on the stack that you're using, is this like an EVM chain? Like exactly how are you building the blockchain?
As a ZKTLS, I mean, obviously on the technical side, I think, I think the sort of obviously sort of implementing sort of a zero knowledge proof here is a very, very key part of this. And of course, trying to basically utilize some of the new frameworks in order to ensure that your identity can also be secure. So we also think that this is actually a very powerful way in where you own the identity, you own the stack, and this also becomes a data layer. So it's not just about owning the ID and the reputation score, but it's also actually storing essentially the data that you have. And that's actually where a node infrastructure eventually will come out as well, because you need to have a way in which you can store essentially your data. And why we think that solves other things is, for instance, take a look at GDPR in Europe is a problem, not because it's not trying to solve an important cause. That's important. It's because people are the custodians of their data. No different, by the way, if you have the custodians of assets, you need to regulate those. And if I'm custodians of your data, I need to regulate that as well. And so GDPR is an example of that. You have to have this infrastructure, the lawyers, and so in order to do that. But the problem we have in places like Europe is that only the large companies can do that. But if you are your own custodians of your own data, then we would argue, right? And obviously we have to legally test this, but we would argue that you are actually the owner of your own data, and it's your issue, so to speak, which means that you don't have the custody issues because you give permission for access to the data, and then other companies will be able to just utilize that, without actually having to go through the same kind of sort of privacy framework, because it's not owned by a platform, because you never actually have access to that data.
Do you see kind of like a wallet that will be portable to different ecosystems, and that people can store their reputation score and data inside of that wallet? Or in practice, how do you see that working?
Well, I mean, the way that you can think of this is that the data is stored on chain, right? And it's the transport on layer, and this is interoperable with other blockchains or applications. And really, the whole idea of essentially using zero knowledge proofs here is to make sure that your identity is protected. The application layer will mostly be done on a kind of a smart contract layer, right? And essentially, the chain infrastructure is a way that you can build and compose on top of it. And of course, the ZK infrastructure provides a way in which you can do this a safe and, I guess, privacy protecting way, different from doing it in sort of, let's say, a classic side chain, for instance, which of course doesn't make sense, we think.
But is your idea that the score that you're able to accumulate on a Mocha chain will be then be used on Solana and like Ethereum
Yes.
DeFi? Okay.
Yes, it should be readable. And the idea really is that it's going to, so when someone has an ID, that ID could then benefit them from another ecosystem because they can basically create that connection, but neither party knows who that connection is made from. And we see this as a way where people may end up having multiple identities, as we do in real life, right? These multiple identities are things like the identity that you have at work, or the identity that you have with your friends, or the identity that you have from your alumni network, for instance, right? And that could even be identities in different countries, which you would translate as different chains. But you have to be a way which you can sort of designate and identify and track that proof, if you will, in a way that I don't need to know who you are on that chain or in that ecosystem, but I know your reputation, right? And we think that's very important because that's the way in which we can then build trust. Because, the problem we have right now in the classic wallet infrastructure is that I can just spin up a wallet that has zero reputation. And then what happens, right? Whereas here, I can actually attest my reputation onto, what could be an anonymous wallet. But then if the anonymous wallet does something bad, then it also affects your score and everything else attached to it. And I guess the design thinking around this is a little bit like what we do in human experience. For instance, if I was to recommend you someone or a podcast or a business opportunity, and he did terrible things, it doesn't just affect his reputation; it affects my reputation as well, right? So I think that's kind of how we think about this, and it's really what we think about is at the core of essentially building blockchain and token economies is really about building stronger networks.
If this identity relies on kind of a network and the recommendations you have by other identities, then I think, is that a way to reduce the risk that, like, because the main issue with identities in blockchain is that anyone can just very easily create new wallets. So if you have a history in a wallet where you are, exploiting a smart contract or, like doing something malicious, you can simply, start fresh and nobody will know about it. Um, so yeah, would love.
So it doesn't stop. Yeah. So it wouldn't stop someone from starting maliciously as a new contract or as a new wallet, as a new user anonymously, but it would stop someone using a framework of if they wanted access with their reputation. So what I mean by that is that over time, if the digital ID framework is used more commonly, then more and more people will generally want to use someone who has an ID. And that to me is not that different from how we certify people in real life, right? And so in other words, every time when, an example would be anytime, you get a referral from someone, you might want to check up that referral. And what do? You ask your friends, you ask a contact, hey, what do you think of this guy, right? Or if the person does a job application, he went to a certain university, what do? We call up the university and say, did you actually go to university? Did that university, did you actually go to this work, right? So we have ways in which we want to deliver that proof. And now we have a way in which we can accelerate that proof. Could someone just come in and say, hey, I'm anonymous, you don't know me, but I still want to have a job? Of course you can do that. What are the chances they get a job? Pretty low, right? So the point being though is we're not there yet. And the reason we're not there yet is because we've, I would say we've conflated sort of anonymity and privacy, right? So in other words, we're saying to people that we need to be privacy preserving, sure, But then now we're saying we need to be anonymous. Those are very different things, right? Even though they may have similar effects at start. Preserving your privacy is not at the expense of your reputation or the fact that you need to uphold being a good citizen of sorts, right? Whereas with being anonymous, you can argue I can do whatever I want because I have no consequences, right? Which is kind of sort of, you can happen in a decentralized internet. Now, the problem we've had, and this is what we try to solve in Web 2, is we create scores. Like you have an Uber rating, 5-star, 4.5-star, 9.9, all that kind of stuff. Or you have an eBay rating or an Amazon rating. But these are very primitive ways. And guess what happens? We game them. So, people basically game them. For instance, if you go on a trip, how many times does a restaurant say, oh, here's a free cookie for a 5-star TripAdvisor rating? I mean, and yes, it's fair game, but is that really a fair rating, right? Or is it more just someone who's giving that rating because he was just sort of entered into it? Because it matters, because the better their reputation, the more discovery and the more customers will go. And how many times have we gone to a restaurant that has like a 4.9 rating and we go in there, the food was kind of like not so good as we thought it would be, for instance, because we can't know. Now, when you have something on blockchain infrastructure like this, there's proofs, there's also something at stake. Because if there was a way to track back to say, hey, the user, they gave you a 5-star rating, and the other user said, you know what, that wasn't so good. Everyone else who gave that a 5-star rating will get affected. What are the chances that you will then actually give that person a 5-star rating if you generally don't believe it's worth it? There has to be some reason they do it, or at the cost of their reputation. So it's basically a trade, right? As it is. Reputation and how we exchange value in that is similarly a trade. And we haven't found a way of doing this. And basically, we believe with a digital identity system that essentially is using zero-knowledge proof, which is privacy preserving, but not creating an anonymous framework, is the answer to that.
I think that you're right that the blockchain ecosystems are still in their infancy, that we haven't created an identity system. And for that reason, right now it's kind of normal to interact with wallets with no history. But in a real world, like you said, that's not very common. So I think, over time we'll get to a place where you expect to see some sort of history and reputation associated with the wallets you interact with. Otherwise, it's just very sketchy, like racist.
I wanted to share a story which sort of helped us initiate that thinking, because as a company, we launch a lot of projects, and also we have sales of items. And because sometimes these sales of items have potential high value, people try to game it. KYC is a good example of that. So we KYC wallets, right? But the problem is that you can always over KYC the wallet because it's the same user for every application that does that, because we don't know who the user is. We don't have a way of identifying that. And then what we discovered was that sometimes up to 80% of these projects essentially have their identity not as the original person that signed up. And suddenly it's people, because they sell their wallets for a couple of dollars to someone else to participate in this particular airdrop. And so some person around the world is saying, hey, I don't care about the value of my identity because nobody knows. So I'm going to sell it 5 times over. And then what you have is, for instance, for the detriment of airdrops, essentially people who are just extracting and they're not real users, right? And so even proof of humanity, like a world coin, is a good indicator of whether you're human, but it's not enough, because that person can still basically sort of just sell his KYC wallet over and over. But if it was something that was, verified, and again, it's privacy preserving. So I don't need to know your name, but I just need to know, wait, hold on, you did this already a couple times. So no, you don't get to do it again, for instance, right? Stuff like that starts to become important. And then people start to realize that they get locked out because they're abusing the system. And then they'll think twice about doing it again, right? It's, I think it's common, not just in blockchain, but blockchain has the best way of doing that, I think, in a privacy preserving way.
Can you talk more about how your Mocha portfolio initiative fits into Mocha Chain? You were saying stakers of Mocha Chain receive these incentives?
The very simple way that we think of receiving the incentives is, of course, partially a flywheel to get people interested in Mocha Chain. I mean, at the end of the day, it's a form of advertising and marketing, right? Airdrops is that, right? But where it's not dilutive is that it comes from the ecosystem we've already invested in, right? So, and so it's a slice of what we've invested in. And so it's kind of saying, Mocha token is essentially a kind of arm or branch of Animoca, right? So that's kind of part of that. But the other sort of high level thinking is we think of airdrops like giving credit. And in a way, we think that's true because when you're receiving a free airdrop, I'm taking a risk on you to do the right thing. It's kind of like if you give someone $10, is he just dumping it and taking it and buying ice cream? Or is he using it in your ecosystem? Or is he holding it? Or is he doing something else? And we're not saying you can't sell it. We're just saying that we can now know what you do with it over time. And therefore, you can then accrue value in the ecosystem. One of the biggest problems that we have in the whole crypto space is airdrop farming. And so imagine if you could have millions and millions of users that have verifiable scores that determine what you do with the token over time. You can actually build good networks of users by knowing their scores. As an example, in the early days of advertising, we used to charge people based on how many times they would click on a website or visit. But then people realized you can make money off that. And then you had farms all over the world basically just fake clicking, basically creating click fraud, right? And we're kind of at that phase of Web3. So how do we solve that? Well, we don't think you solve it in the classical AI way, although there are tools around that, or sort of better tracking only. But we think by building a digital reputation system, we can really find a way in which we make that scalable for the long term, right? So that's really an example. And so the mechanism of giving tokens to our ecosystem is also a way of determining whether the user over time will improve his behavior because he'll want to get more tokens or do more stuff, and it will affect his score over time. And he'll be able to measure and see that. No different than sort of, like if you're driving in a car and you have a lot of crashes, I guess you get points deducted for good reason, right? So eventually, maybe you're not allowed to drive anymore because, you're a danger to society. I mean, that's exactly sort of the framing of thinking here. So it serves multiple purposes, right? A share of our ecosystem, educating what it means to receive these tokens, creating kind of credit score, enhancing your reputation, ultimately creating hopefully user behavior from that. And in due course, we hope, of course, and it's happened a few times already, where people then just start basically giving Mocha token holders sort of benefits anyway, because they assume that these networks, our network is of a certain quality because they can sort of, measure that. So that's kind of sort of the next step.
So the idea is that Mocha holders who are staking their token in Mocha Chain will get these in airdrops incentives from tokens that are also in the Animoca ecosystem. So do you expect, along what you were saying, holders who are not just taking these airdrops and selling them or not doing anything, maybe those holders who are then participating in the Animoca ecosystem will get further rewarded? Is that kind of the
Yes,
thinking?
yeah. And we have this thing called staking power. And so what happens when you stake your Mocha tokens, you receive more staking power over time. And so the more and longer you hold, the more staking power you receive. And then there's a little bit of a game involved in terms of you deciding how much staking power you burn for which token and how you do that, for instance, right? So there's a little bit of that element, so you can decide. But the point is that it's essentially sort of the beginnings of a kind of credit accrual system that you basically earn. And again, the more you stake, the more you hold, the more power you get. But of course, that's also evolving on the back end in terms of giving you a deeper credit score based on what you do and the activities around that over time, building a much more fleshed out sort of reputation score. And of course, we're also collecting data points of other things, right? So this isn't just limited to what we do. This is one part, more financial, you could argue. But for instance, you would plug into, what's happening with SK Planet, which is, basically has another way in which it sort of measures reputation. And then that also comes part of the data feed. And over time, it's your digital ID, but what's valuable in a digital ID is your data, right? And eventually, when you start selling your data, you receive value for that as well. And your data, we would argue, becomes more valuable over time because of the fact that there's also a reputation attached to it. Like, for instance, is it good data? Are you curating it? Is it something that other people find useful, right? So the attributions won't just come from us, but they should be coming from third-party networks that integrate with Mocha Chain.
You were planning to integrate data and history from other chains and potentially even off-chain sources.
Yes. And so off-chain sources is one of those examples where you can have an oracle essentially that basically gives them part of the score. And so the point though being that you, as a sort of someone who's accessing the data, you can choose whether you want to accept that data or not. So meaning that it's not just a mashed up score, but you could say, look, I'll take the rating from this and I'll take a rating from that, but I might not take the rating from this as seriously because they might be too generous or they might not be looking at this. And this is no different than when you think about sort of, scores that you get from say travel booking, for instance, right? When you go to an aggregator website like TripAdvisor, you'll get essentially an average score, but that average score accumulated over 10 different websites tells you something. And then you might disregard something that's on booking.com, but you might accept something that's on trip.com or something like that, right? So, but there's going to be multiple data sources. And then you can decide whether you give value and attribute value to that data source or not as a buyer of that data, which you can then pay them in the form of tokens or otherwise, right? That's kind of where this scales out, because now, I can really target them directly. And of course, to do so, you have to use the Mocha chain, because that's the one that helps organize all of this.
Have you looked into other networks doing something similar, and kind of organizing communities that want to sell like the aggregate of their data? We recently, or a few months ago, had Vanna on the podcast, and they're doing this. They're like creating communities around different data sets and kind of providing like a marketplace for sellers and buyers of data. Maybe kind of the Mocha ecosystem can plug into Vanna and like
Absolutely.
sell data in that marketplace?
Absolutely. So we're not thinking of it. It's not exclusive at all. This is about interoperability. So if people see a benefit in tapping in, the data basically can be sort of marketed across essentially our ecosystem. That is not a problem at all. I think the main point really is around sort of if there's confidence in the way that they're treating their data in a sovereign, decentralized manner, then it's very easy to do that, right? So the largest shift though that we're seeing right now is from Web 2 platforms going into Web 3. So it's a bit different here. Because they're not starting from a decentralized perspective. They're starting from a centralized perspective. They already have custody of these users' data. They want to move them on chain, right? And that's really what Mocha Chain was designed for, to help them find sort of a sort of secure way of doing that on chain. However, it can tap into any source, right? And that would be a perfect example of someone who could potentially partner with Mocha Chain.
I think like all through Web 2, people have kind of assumed that data is the property of the platforms that you're using and interacting with. You kind of agreed tacitly, or even by actually tapping an agreement that nobody reads, to just like give up your data to these Web 2 giants. Do you think, are we coming into a point where people actually are starting to care about how their data is handled and who owns it? Because like my worry with all this is, it sounds great, like owning my own data, but I don't know if like most people care about that, especially if they are gonna like be able to see value very quickly, because that's the thing, like if you sell your own data individually, you're not gonna get anything. So yeah, it's like there needs to be a lot of coordination around that.
Correct. So, I mean, first of all, blockchain is very good at coordinating this stuff, but I agree with you that generally speaking, it's for most users, they don't understand because they're not very data literate. They don't understand the value, and they also don't understand that it's the derivative network effects that make their data valuable. It's not the data in and of itself. Like, like who cares about my Instagram photos, right? It doesn't mean much, right? However, in aggregate, they become valuable and they become the source of many, many things that drive these trillion-dollar companies. So part of it is education. And of course, what's the best form of education? It's value, right? And so if we contribute our our portfolio into Mocaverse as a demonstration of enhancing and developing your data and doing stuff with it and sharing, then people start to learn and understand, oh, okay, if I do this, I'm worth something because it's a way of storing that data, right? Which over time drives other dividends. The point is that once you share the value, then people will fight for it. In the sort of people have to know what it's worth, right? So it reminds me back of the early days of the internet when what the internet really did was it really democratized access to information and knowledge, and as a result, people were no longer able to have information arbitrage the same way that they can do this right now. And so the information arbitrage came in the form of, an example would be, they would buy rice from Chinese farmers and they would sell it for literally 30 times or 40 times more because the farmer in China had no idea what the price was in America, for instance, right? And then because of the internet, they're like, hold on a second, you're making a huge margin. I'd like some more. And the point is not that the other party might agree. They might not. However, some other enterprising person would go, oh, the cost of your rice is, 20 or 30 times less. I'll give you 50% or 30%, I'll give you much more to do business with you. And a real market starts to develop, right? And that's what we need for data. And so if people can see what the data is worth, and again, not every data is worth the same. That's normal. But if people can see what their data is worth, then they can understand, and then they'll fight for it. And then they'll try to say, okay, so how do I make my data more worth? Why do this? And this is basically what the platforms have gamified. So for instance, why do people make content on TikTok? To become famous or to have attention, right? Why do they create that attention in these networks? Because it actually makes the platform more powerful and more rich as a result, because they create noise and advertising potential and all that kind of stuff, which the user doesn't get anything for. They just created sort of that drive to do so when they don't understand that value, right? So that to me is a key component of that. We have to educate people what it's worth, and essentially dropping them tokens is one of the best ways of explaining that there is value attached, and then have them on board onto that journey.
It's such an interesting moment where kind of these concepts of data and ownership are just starting to change. But changing gears on something completely different, but maybe not so different because it's also related to ownership. But in any case, I've seen rumors and news reports that Animoca is considering a US listing. I know you probably can't talk directly or confirm any of these rumors, but just broadly, if you can, address them in any way that you can, and also, in theory, speak about what the benefits would be of having a U.S. listed
Of course.
company.
Of course, yeah. I mean, the official answer is no comment. But I do know that there's been quite a bit of market rumors and articles from in some cases, very high profile publications that have talked about this. The general thing, and the one thing that is true is that we're paying a lot more attention to the US market. We've been in the US a lot. We're meeting a lot of people. We're looking at setting up shop more directly there. And that has a lot to do with the fact that the US is, of course, very, very friendly towards the whole crypto industry now. Of course, this sort of big 180 means that the US actually wants to be the center of crypto. In many ways, New York is becoming the crypto capital of the world. So if you want to be anyone or anything in crypto, you kind of have to be in New York, right? It would be really sort of not wise for you not to be there. And so we see the same thing. Now, that means that theoretically, if we were to list in the market, it would be foolish for us not to seriously consider the US market. But of course, even though we're an Australian corporation, we're quite well known in Asia. We have a big office here in Hong Kong. We could consider Hong Kong as well, for instance, right? So there's many options, or maybe we consider both. It's not uncommon to have dual listings. So I think the other thing, of course, why I think some people will speculate about it, is that we were once a publicly listed company on the Australian Stock Exchange. So we have a history of being public. We have thousands of shareholders, for instance. And many of them are retail shareholders back from the day when we were publicly listed, right? And we've also told them that we do eventually want to be a public company again. So I think combining all of that, and of course, the excitement of, the IPOs have done very well. When you think about IPOs of Circle or Bullish, Gemini, all these companies have done incredibly well. In terms of scale and size, we do publish our financials because, we are a public company, even though we're unlisted. Last year we had $314 million of revenue with close to $100 million EBITDA and sitting on close to $2 billion worth of assets. A lot of them are liquid crypto. The size and scale of that might get people to think, oh, you know what? Maybe this, compared to some of those other companies, maybe there's potential, right? So I think it's not unrealistic to make that assumption. But of course, that's about all I can say in terms of our plans. But it is true that we do eventually seek a listing.
Interesting to hear you're looking more at the U.S. Besides, considering a listing here, any other plans to,
Oh, it's business development. It's market opportunities. I mean, it's also for our portfolios, right? I mean, we have, 600 plus portfolios. Many of them are not based in the US, although we have quite a few US investments. And they need to enter the US market. They need to understand the potential that's there. So if they don't, then they're leaving out the fastest growing market, really, in crypto. The interesting thing is, and I think digital asset treasuries are a good demonstration of that, the pent-up demand for crypto assets because of a previously fairly unfriendly regulatory framework has now just been unleashed, right? And so, so people are looking at that, and some people scratch their heads. Even, we did a lot of that in terms of investing as well, and it made sense at the time. But a lot of people scratch their heads around, why is there so much demand for crypto assets in US? And I would say it's not just because of the framework and the popularity and Trump. It's the fact that there was actually always sort of demand for it, right? It's just they weren't allowed to come out, right? That was part of that.
And then, speaking of all the companies and sectors you backed, I think gaming and kind of the Web3 aspect has always been one of your biggest bets, together with the metaverse. And I think kind of for both of those sectors, there were very high expectations of what crypto gaming and what the metaverse would do. But I think it's fair to say that those sectors have kind of failed to live up to expectations. So yeah, would love your thoughts on, is it still kind of too early for those, or have you changed your thoughts or your conviction even in those
No.
sectors at all?
So first of all, our conviction is very, very strong. Of the 600 plus portfolio companies, the 66 of them are in gaming and metaverse. So yes, we are very, very committed to it. But I think there's a couple points towards that. Has it failed expectations? I would argue not, but it depends on the lens in which you're from. So if you look at the combined market cap of gaming and metaverse related tokens, it's around $20 to $25 billion, depending which way you're looking at. Okay. So that's actually pretty good, given the fact that 5 years ago, it was a $0 industry, essentially. Nobody was looking at it, right? And the same is true for NFTs, which is kind of sort of bucketed in that same sort of category often. NFTs are $500 million to $600 million of sales a month, right? So yes, it's not what it was at the peak. But again, this was an industry that simply did not exist 5 or 6 years ago and has come a certain size. So it's not talked about the same way, right? And if you look at on-chain activity, it's actually games that tend to be the most used applications. That said, where people are often comparative, right? They look at, okay, so when we say disappointment, the disappointment is relative to other projects. So if you're an investor and you would have invested, in a sort of broadly in gaming early days, and then you were investing in AI tokens, right? Then of course you would have done better in AI tokens, for instance, right? Or meme coins last year, right? And this year, basically, sort of on-chain dexes and perps and so on, right? And so forth, right? So there are things that are narratives that are hotter, but these narratives that are hotter don't just come from utility; they also come from market meta, right? So, for instance, when you talk about the number of people who play on-chain games versus the number of people who use essentially AI tools on-chain, obviously on-chain games have more users. But what has more value? The AI tokens versus the gaming tokens. Is it because of underlying utility? We would argue not. It's actually because of the fact that the market meta is actually more positive on AI than it is on gaming. Right. So in other words, if the gaming segment as a token pricing was to increase, the sentiment on gaming has to increase. Our view on tokens generally, including many meme coins, not all of them, of course, are reflections of essentially market pricing in the same way that commodities and shares are. So in other words, if there's something very exciting, meme coins indicated or tokens indicated in terms of their pricing action, almost like an open poly market, right? So that explains things like, Trump, for instance, or Sam Altman's tokens in terms of WorldCoin. I mean, again, there's a meme-like quality, but the meme-like quality comes from the fact that there's attention, and the stock market operates in a similar way. So I would say that in that sense, it just mimics that. So for gaming tokens to really emerge, we need the gaming meta to improve. And what is the gaming meta? It's not just about how many people play games in Web3, because at the end of the day, it's still a smaller number compared to gaming broadly, just like AI, right? It's not that Web3 AI companies are bigger than OpenAI or ChatGPT, Perplexity, and so on, but not by a long shot, right? But it's actually the fact that AI broadly has a very positive meta. And we think next year that will be driven by things like Grand Theft Auto as a GTA 6, which was meant to be launched this year, but of course was famously delayed again and again. Why do we think that's going to make that change? One, macro gaming has had a little bit of a deflationary problem. It's been flat. It hasn't been growing. And the reason why it hasn't been growing a lot is in the revenue size is because it hasn't caught up with inflation in terms of prices. So the cost of a game is roughly the same as it was 10 years ago. And so, because money supply has increased, because the cost of milk has gone up, because of the cost of salaries has gone up, but the cost of gaming has stayed the same, gaming companies are making less money in real money terms. That's the first point. The second one is distribution. The chokehold of distribution between Apple, Google, and Steam has become so severe that they're taking in aggregate more than 50, sometimes 60% of all the value before. So it's kind of like the monopoly effect, right? So that has to sort of break open and change, right? And again, I think blockchain is a part of that solution because essentially you have direct access to customers, different forms of distribution. Similarly to how the game industry was actually quite flat, before the smartphone came out, and then when the smartphone came out, its real revolution was finding new forms of customers and distribution, which then basically revolutionized the space and created that growth. When GTA 6 comes out next year, the rumor is that they're going to charge between $90 to $100 per game, which is basically 30 to 40% more than what average games are costing. This will have a couple effects. GTA is probably the biggest cultural moment. As a gaming meta, it's going to be big. That's number one. Number two, value will go up. More consoles will be sold. Once a person buys a console, the average people people buying more games based on console is 10 to 12, sometimes 16 titles in terms of lifetime value per console, which means that there's been more game revenues broadly be driven in this space. And of course, culturally, everyone will be talking about GTA 6. And then finally, GTA 6 has this thing where you can run your own mods, you run your own servers. And there's a lot of talk about people wanting crypto rails. And and of course, Take-Two, which is the owner of Rockstar, which is the producer of GTA 6, is not going to launch a token or anything like that. So don't get too excited about that, right? I guess. But the main point is that because of the RP servers that they have, role-play servers, you can actually potentially run crypto rails on them. And under the previous administration, it was very dangerous to allow that, so they just didn't allow it. But under this current administration, they might not launch their own token, but they'll be okay for other people to do that as well, which I think will then drive quite a bit of adoption as well. So I think there's a whole sort of combination of things. It's not one thing. And so which is why we're continuing to place bets on gaming because of next year. Talk to me about it in 12 months.
Very interesting. Okay, we'll be watching. But beyond just like the macro gaming environment, having been kind of subdued lately, and your expectation that that'll change next year. What about like just Web2 gaming development itself? Like, do you see that kind of becoming at the same level as kind of like just non Web3 games?
So first of all, Web3 games, broadly speaking, in terms of total number of users, is increasing. I think the thing is that if you want to focus on, companies shutting down, some studios shutting down, that kind of stuff, sure. However, you remember 5 or 6 years ago, there were maybe only 5 studios in all of Web3, okay? Right. And now we have thousands and thousands of them, right? So that's not to say that there should be thousands of thousands, right? That's the other thing, right? So you have a case where too many people are making games for the current size of the ecosystem, but the ones that are out there do well. Now, here's the other thing. We've made investments in companies where we believe their tokens are undervalued because the companies themselves are actually profitable, right? And it comes out of, so they make revenue in form of advertising or in-app purchases, but the token hasn't done well. And there's a couple of reasons behind that. One of them is that the idea of token buybacks, for instance, maybe making a measure in which they would say that the profits of the business can now go back into the token, was something that was actually disallowed under the previous administration. And now everyone's like talking token buyback, right? Like I said, it's like, and share of profits or something. And, there's going to be a balance somewhere. But the point is that now you can be more open about it, right? What's the reason so many game token launches are more like meme coin launches? Because they can't talk about utility. They can't talk about value, because if they did, then they get whacked in the face, right? And many other things. So this is part of that, right? And of course, as a result, they struggle with the narratives, and now they have to kind of reshape the tokenomics a little bit, because they went from not being able to say it to, hey, I can say that. So that's, I think, a big part of that, right? And so I think part of the resurgence comes from companies that are actually making money and saying we're going to buy back that token, which the DeFi protocols are basically able to do on day one, right? It's part of that, hey, we're making money, we're taking fees, we're burning tokens. It's normal, right? And so that's part of that mechanism. The other thing, of course, is also evolution. The blockchain games that are out there that have users many of them are a different type of gamer. So they're not the gamer that people were hoping to get. They're gamers that are more financially oriented because that's what attracted to them. They're more value oriented, and there's a different type of gameplay. But we have that in gaming in the form of real money gaming, for instance. Those are very large industries, driving billions and billions of dollars of real value. And of course, it's expanding into different audiences. So there's a blend. So we do have companies in our portfolio, like for instance, Gunzilla, which is sort of an example of a first-person really AAA type of game that is trying to do we're going to go for the classic gamer and put them into Web3, and has some certain level of success, right? But then you have the ton ecosystem, and there are hyper-casual gaming ecosystems, like sort of companies like Gamey that are actually profitable, driving tens of millions of users, right? But have a token that really hasn't reflected its value because they haven't figured out or haven't communicated a mechanism of value yet, right? And again, that comes from the fact that they have to sort of reformat some of that. And again, that to me is an important part of the narrative, and part of the sort of evolution of now being able to say and do things that they couldn't do before.
I think it's so interesting that we're just now seeing how the founders can find real utility for their token after the industry was held back for so long, having to find these workarounds because of the regulatory environment that in the end hurt everyone. It was meant to protect users, but in the end, it just meant that they were holding a meme coin instead of a token that could actually be useful and productive. So I'm glad that we are kind of coming around to a different era. And then finally, Yad, I know I've had you for a bit longer than scheduled, so I appreciate it. But would love your outlook on the crypto market. So now I think it's consensus that we're in the middle of a bull market. Bitcoin has had a great year. It's become kind of accepted as a global store of value. Ethereum as well, and Solana has had a great year. So now kind of the question is alt season coming? So what are your thoughts there?
Yeah, so broadly speaking, first, yeah, it's been a great year, I think, even though some people might disagree because they have short-term memories and they're like, oh my goodness, right? But yeah, just remember what it was just a couple of years ago, right?
Yeah.
So first of all, of course, the space is going to continue to grow. One of the trends that we're seeing on institutional adoption is digital asset treasuries. So our view is, whether it's digital asset treasury or an ETF or whatever you want to call it, something that goes into public markets, we believe if you want to be a token that can be institutionally adopted, that people can be prepared to invest in from an institutional standpoint, you have to have a public markets play. And it's not because of the fact that people can't buy a token. It's the fact that someone can be held accountable for that is, they got an institutional reputation, right? So it required sort of the likes of a Tom Lee, for instance, to go and say, hey, ETH is great, for ETH to actually be taken seriously as an institutional asset because someone is now accountable for it, even though it's decentralized as an ecosystem, for instance, right? And I think that started with Bitcoin much earlier, right? And then now it's going with Solana and everything. So every token that is worth its salt will ultimately have either that or ETF or some kind of way in which you get vested. So that trend will continue, and whether they're successful or not is a different question, but I think you'll see much more of that. The second thing, and I think Bitcoin is going to love me for this, but I would argue it's good for them, which is that over time, we believe that altcoins as an overall index is going to be significantly larger than Bitcoin. This may sound like heresy to Bitcoiners, right? Because today, of course, Bitcoin is roughly 2 times that of altcoins. And the perspective we take is that Bitcoin is very similar to gold. And gold is the single largest asset, right? And gold for a while has been the one largest asset in the world, right? Especially when the world was on the gold standard. However, when you think about the market caps of all companies combined, for instance, it's 128 trillion compared to 24 trillion for gold, right? And why is that? Well, because of the innovation and growth that's happening in these companies. So Google and Facebook and Apple individually are not bigger than gold. But as a collective, they are bigger than gold because they're the ones driving adoption. They're bringing growth. They're bringing technology. They're creating innovation, right? It's IP, trademarks, all that kind of stuff. And what are the sectors essentially in crypto that represent growth and that kind of opportunity, that kind of development, that user adoption? I'm afraid it's not Bitcoin. And Bitcoin was never meant to be that type of sort of asset. It's a store of value. It's basically, I like to call it your crypto savings account, right? So when you're basically trading meme coins or you're trading digital assets or you make money earning tokens in your on-chain gaming ecosystems or whatever it is, then you have some profit. You might continue to trade some, but guess what? If you want to save some, you buy Bitcoin. And so the reason why Bitcoin is growing is because the ecosystem is growing, right? And I think this is where we have a part of the difference here, which is altcoins from a mental accounting standpoint is something where people are willing to spend because there's an inflation. And that inflation causes people to continue to spend and therefore grow and create investment capital versus Bitcoin, people don't spend it, right? So if Bitcoin was the only asset in the world, then we'd have a really, really terrible economy because nobody would spend their Bitcoin, right? And an economy where you don't have spend isn't an economy to begin with and doesn't have any flow, right? And so that's really the big point here is that the engagement comes from altcoins. We're not there yet, but over the longer term, and certainly that is Animoca's bet and perspective, is that altcoins are going to be much larger as a collective and is going to drive, as it has done, growth and innovation in the space.
Are you betting that the Mocha token will be, like you said, kind of an index or a way to get exposure to this larger
It
altcoin
is.
sector?
Absolutely. It is. Absolutely. It is one way to get exposure to that index. Absolutely. Yeah. Yeah.
And then, well, and we'll probably see an just like an altcoin ETF coming soon with all the recent regulations as well. So that'll be another way.
Yes, indeed. Yes.
Awesome, Yat. Thank you so much for joining me. This was fascinating. I can't wait to see everything that happens with Mocha Chain. At the Defiant, we'll be covering as always, and yeah, also really interested to see whether your stablecoin gets approved or not. So all the best of luck there as well.
Thank you so much. Thank you so much.